Your CPP and Old Age Security payment is hitting your bank account on April 28th. And if you have not checked your amount recently, there is a real possibility you do not know how much it has changed, why it changed, or whether you are actually receiving everything you are entitled to. That last part matters more than most people realize, because across Canada right now, there are seniors who are enrolled in benefits they never applied for, seniors who are missing benefits they fully qualify for, and seniors whose payments are about to be disrupted by something as simple as an unfiled tax return. Today, we are going to go through all of it: the confirmed payment date, the confirmed increases, the exact dollar figures for CPP, OAS, and GIS, and the steps you need to take right now to make sure your income is protected. Let us start with the payment date itself. The Government of Canada has officially confirmed that the next round of Canada Pension Plan and Old Age Security payments will be issued on April 28, 2026. That date is on the government's official benefits payment calendar, and it is confirmed. If you are enrolled in direct deposit, your money should be available in your bank account on that date, typically early in the morning. If you receive your payment by check in the mail, allow 2 to 3 additional business days for Canada Post delivery. If by May 1st your payment has not arrived and you have no explanation for the delay, contact Service Canada directly at 1-800-277-9914. A delay of more than 2 to 3 business days past the official payment date is not normal, and it is worth following up on immediately. Now let us talk about the CPP increase, because this is the number that has changed your monthly income since January, and it is the figure most people want confirmed. Canada Pension Plan benefits receive their annual cost of living adjustment at the start of 2026. The Government of Canada has confirmed that CPP benefits were increased by 2% for 2026. That adjustment took effect in January and has been reflected in every CPP payment since then. The April 28th deposit already includes this full adjustment. If you have not compared your current monthly payment to what you were receiving in late 2025, now is a good time to do that. Let us put that 2% increase into real dollar terms, because a percentage figure does not always feel meaningful until you see it in concrete numbers. If your CPP retirement pension was $700 per month at the end of 2025, a 2% increase adds $14 per month, bringing you to $714. Over a full year, that is an additional $168. If your CPP was closer to $900 per month, the increase is $18 per month, or $216 across the full year. The percentage is identical for everyone, but the dollar amount scales with whatever you were already receiving. For those at the higher end of the payment range, the additional income is more noticeable in real terms. The maximum monthly CPP retirement pension for someone beginning at age 65 in 2026 is $1,576.50 per month. That is the figure for new CPP benefits starting in 2026, and it reflects both the standard annual inflation adjustment and the ongoing CPP enhancement that has been phasing in since 2019. For existing recipients whose CPP was already in payment before January 2026, the 2% inflation adjustment was applied to your personal monthly amount as of December 2025. It is important to understand that the vast majority of Canadian seniors receiving CPP do not receive anywhere close to the maximum. The amount you personally receive is based on how much you contributed to CPP during your working years, and for how many years those contributions were made at or near the annual maximum level. If you had periods of part-time work, years of lower income, time away from the workforce for caregiving, or years of unemployment, your payment reflects that. This is not a mistake. CPP is a contributory program. It mirrors what went in over a working lifetime. For 2026, the year's maximum pensionable earnings, the income ceiling on which standard CPP contributions are calculated, is $74,600. The second earnings ceiling introduced through the CPP enhancement, known as the year's additional maximum pensionable earnings, is $85,000 for 2026. This second tier affects current workers who earn above the standard ceiling and is building toward higher CPP benefits for those contributors when they eventually retire. If you are already retired and receiving CPP, This detail is less directly relevant to your current payment, but it matters for younger family members who are still working and planning ahead. Now, let us move to old age security, because the April 28th payment includes OAS as well, and the figures for the April to June 2026 quarter have been officially confirmed. The maximum monthly OAS pension for the April to June 2026 quarter is $743.05 for seniors age 65 to 74. For seniors age 75 and older, the maximum is $817.36 per month. These amounts reflect the quarterly adjustment that takes effect with the April payment. OAS benefits increased by 0.1% for this quarter, and over the past full year from April 2025 to April 2026, OAS has increased by a total of 2.1%. The April 28th payment will reflect these updated rates. For seniors who are 75 and older, the higher OAS amount reflects the permanent 10% increase that was introduced in July 2022 specifically for that age group. If you turned 75 at any point after July 2022, you were automatically moved to the higher rate the month following your birthday. No application was required for that increase, and no application is required to receive the quarterly inflation adjustment. Both happen automatically. There is a protection built into OAS and GIS that every senior on a fixed income should know clearly. OAS and GIS payment amounts are reviewed every 3 months, in January, April, July, and October, and adjusted upward when the consumer price index rises. And critically, they will never go down even if inflation decreases. That downward protection is written into the legislation. Your payment can increase with inflation, but it cannot fall because of deflation. That is one of the most important financial safeguards available to Canadian seniors, and it applies automatically without any action required from you. Now let us talk about the Guaranteed Income Supplement, because if you are a lower-income senior and you are not fully informed about GIS, this section may be the most financially significant part of this entire conversation. The Guaranteed Income Supplement is a non-taxable monthly benefit paid on top of old age security to lower-income seniors. It does not come from CPP contributions. It is funded through general government revenues, and it is income-tested, meaning the amount you receive depends on your income from the previous tax year. To receive GIS, you must already be receiving OAS, you must be 65 or older, you must live in Canada, and your income must fall below the annual threshold for your marital situation. For the April to June 2026 quarter, the confirmed maximum monthly GIS for a single senior, a widowed senior, or a divorced senior is $1,985. For a senior whose spouse or common-law partner also receives the full OAS pension, the maximum GIS per person is lower, reflecting the combined household income level. For a senior whose spouse or partner does not receive OAS or the allowance, the maximum GIS amount can also reach $1,985 per month. When you add GIS to OAS, the total monthly income from just these two programs combined is substantial for a qualifying senior. At the April 2026 rates, a single senior receiving the full OAS of $743.05 plus the maximum GIS of $1,985 would be receiving a combined total of $2,728.05 every month from OAS and GIS alone, before any CPP they may also be entitled to, and the GIS portion of that is entirely non-taxable. That is real income that matters every month for seniors living on modest means. The allowance program is also worth knowing about. If you are between 60 and 64 years of age and are the spouse or common-law partner of a GIS recipient, you may qualify for the allowance. For the April to June 2026 quarter, the maximum monthly allowance is $1,413. For surviving spouses or common-law partners between the ages of 60 and 64, who have not yet reached OAS eligibility, the allowance for the survivor has a maximum of $1,682.15 per month for this same period. These programs are not widely discussed, but for those who qualify, they provide vital income support during the years before OAS eligibility begins. Now, a critical reminder about GIS that cannot be overstated. Filing your income taxes on time is directly and immediately connected to your GIS payments. Every July, Service Canada recalculates GIS eligibility and payment amounts based on your previous year's tax return. If you do not file your 2025 income tax return by April 30, 2026, which is just 2 days after the April 28 payment date, your GIS payments could be suspended in July until Service Canada receives your income information. This is not a punishment or a policy decision made against you. It is simply how the program is structured. GIS is income tested. Without your tax filing, the government has no way to verify what you should be receiving. Filing on time is one of the simplest and most important steps you can take to protect your monthly income from being interrupted. For seniors who are unsure how to file or who feel overwhelmed by the process, the Canada Revenue Agency's Community Volunteer Income Tax Program offers free tax preparation assistance to eligible individuals, including seniors with modest incomes. Community centers, libraries, and local senior organizations across Canada participate every year. Call 1-800-277-9914 or visit canada.ca to find free tax help near you. The April 30th deadline is close. Do not let it pass. Let us now address the OAS clawback because some higher income seniors need to understand how it may affect their overall OAS entitlement. The OAS repayment threshold, the income level at which the government begins recovering OAS through your taxes, begins at $95,323 for 2026. For every dollar of net world income above that threshold, 15 cents is recovered from your OAS pension through your income tax return. For seniors aged 65 to 74, OAS is fully clawed back when income reaches $154,780. For seniors 75 and older, the upper threshold is $160,647, reflecting the higher OAS amount for that age group. This applies to a relatively small percentage of Canadian seniors, those with significant income from investments, private pensions, or continued employment. But if your income is approaching the lower threshold, working with a tax professional before April 30th about strategies to manage your net reportable income may still be worth the conversation. Returning to CPP for a moment, if you are still working part-time or in any paid employment while already receiving your CPP retirement pension and you are under the age of 70, contributions are still being made on your behalf. Those ongoing contributions generate what is called the post-retirement benefit, a small additional monthly amount that is added to your existing CPP payment every January following a year of contribution. If you have been working since starting CPP and your monthly payment has never changed from its original level, contact Service Canada and ask specifically whether your post-retirement benefit has been calculated and applied to your account. The timing decision around CPP is also worth addressing directly because it is one of the most financially significant choices a senior can make. If you start CPP before your 65th birthday, your monthly benefit is permanently reduced by 0.6% for every month you collect before 65. Starting at age 60 months early, results in a permanent reduction of 36%. If you delay past 65, your benefit increases by 0.7% per month up to age 70, resulting in a maximum increase of 42% compared to the age 65 amount. The break-even point between starting at 65 versus waiting until 70 falls somewhere in the early 80s for most people. If you live past that point, the delayed start produces meaningfully more total lifetime income. This decision should be made based on your health, your other income sources, your current financial needs, and your honest assessment of your longevity. There is no single correct answer, but it is a decision that benefits enormously from having the real numbers in front of you. Let us also address how your April 28th payment reaches you. For the large majority of CPP and OAS recipients, direct deposit delivers the payment to a Canadian bank account on the scheduled date. If your banking information is current, no action is required. If your banking details have changed, due to switching banks, closing an account, or opening a new one, you need to update your direct deposit information with Service Canada as soon as possible. A missed update means a missed or delayed payment. You can make that update through your My Service Canada account online, by calling 1-800-277-9914 or by visiting a Service Canada Centre in person. If you are still receiving payments by check in the mail, switching to direct deposit is the simplest and most reliable change you can make. It is free, it is secure, and it ensures your income arrives on time every single month regardless of postal delays. One additional point on income tax withholding. Both CPP and OAS are taxable income. GIS is not. If you have not requested tax withholding from your monthly CPP or OAS payments, and your combined income from all sources is meaningful, you may find yourself with a balance owing each April. Service Canada allows you to voluntarily request income tax be withheld directly from your monthly payments throughout the year. This prevents an unexpected tax bill in the spring and keeps your tax obligations smooth and predictable. You can arrange this through your My Service Canada account or by speaking with a Service Canada representative. Finally, if you have never applied for GIS and believe your income may qualify, do not delay. Service Canada does proactively enroll some low-income seniors automatically when their tax information clearly shows eligibility. But this does not happen for everyone. If you are not certain whether you are enrolled, check your My Service Canada account or call Service Canada directly. Back pay for missed GIS can be recovered for up to 11 months in some circumstances, but there is no full retroactive recovery for years of missed entitlement. The sooner you check, the better. There is one more topic that deserves clear attention, and that is the situation of seniors who have not yet reached 65 but are approaching that milestone. The recommendation is to apply for OAS approximately 6 months before your 65th birthday. In many cases, Service Canada will send an automatic enrollment letter before you turn 64, but this does not happen for everyone. If you have not received that letter by the time you are 64 and a few months old, take the initiative and apply directly through your My Service Canada account or by calling Service Canada. An early application ensures there is no gap in your payments once eligibility begins. It is also worth knowing that in certain circumstances, seniors who delayed applying for OAS past their 65th birthday can receive retroactive payments for up to 11 months of missed OAS, but only if they request it and only if they meet the specific qualifying conditions. If you are already past 65 and have not yet started OAS, contact Service Canada now to understand what retroactive entitlement, if any, applies to your situation. Every month of retroactive OAS you are entitled to and do not claim is money that is left on the table permanently. For seniors approaching 60 who are still deciding on the CPP timing question and want to model out different start dates, a Service Canada representative can walk you through the specific dollar impact of starting early versus delaying based on your own personal contribution history. That conversation is free and it uses your actual record rather than general estimates. The difference between a well-informed CPP decision and a default one can amount to tens of thousands of dollars over the course of a retirement. Your April 28th payment is confirmed. The 2% CPP increase is real. The OAS quarterly adjustment is in effect. And if you are a lower-income senior, the GIS amounts available to you this quarter are the highest they have ever been. Leave your question in the comments below. If you are wondering why your personal CPP amount differs from what someone else receives, if you have never investigated whether GIS applies to your situation, if you are unsure whether delaying OAS makes sense for your circumstances, write it in the comments. Every comment is read and responses are given. This is a community built for exactly these questions. If today gave you clarity or confirmed something you had been unsure about, please share it with someone in your life who receives Canadian pension benefits. A neighbor, a sibling, a friend who worries about their retirement income. So much financial stress among seniors comes not from the money itself, but from not having access to clear and accurate information. Sharing what you know is one of the most practical ways to support someone you care about. Subscribe and turn on notifications to stay current when Service Canada announces the July 2026 OAS and GIS rates, as new payment dates are confirmed, and as any changes emerge that affect your income. You deserve to be among the first to know. This is Canada Pension Vault.